Now we'll work out illustration number 3. So we are discussing discounting a bill. So now the bill is with the bank, and that time what is the journal entry we have to record in our books? Our books means drawer's books. We'll be recording it as cash or bank account debtor because we'll be getting the amount from the bank. Then discounting charges also will be debited, being an expense for the firm, or for the drawer it is an expense. So it is cash account debtor, discounting charges account debtor. To what are we receiving? It is the bills receivable we are getting, and we are finally giving it to the bank. So it is cash or bank debtor, discounting charges debtor to bills receivable. That already you have written in your book. So now we'll work out illustration number 3, which is based on discounting a bill. We'll go through the question first. Prakash received from Mohan an acceptance for rupees 30,000. So Mohan is accepting the bill, means Mohan is drawee and Prakash is the drawer. First of all, you have to identify that. And the date is on 1st July 2019 at 3 months. Prakash got this acceptance discounted at the rate of 12% per annum at his bank. On the due date, Mohan paid the required amount. Give necessary entries in the books of Prakash and Mohan. Before moving on to the problem, we will discuss two terms, that is due date and date of maturity. Usually we are using these two terms interchangeably, but actually there is a difference between due date and the date of maturity. Due date means the date on which the amount is due for payment. Okay, the date on which the amount is due for payment is known as due date. Now, date of maturity means when we add 3 extra days to this date of payment. Okay, when we add 3 extra days to this due date, what we get is the date of maturity. Suppose we'll take the same example. The question says like we received the bill on 1st July 2019 and the due date is fixed as 3 months. So after 3 months we'll be getting the amount. So after 3 months means we are starting from July 1st. So August 1st, then September 1st, October 1st. So that should be like October 1st. The due date should be October 1st. Understood? We have drawn a bill on July 1st. So we have to count like this. August 1st. So that will cover 1 month. Then September, October. So October 1st will be the due date. Now date of maturity means you will have to add 3 days to this. That is a rule or custom that you have to add 3 extra days to the date of payment to get the date of maturity. So now when you add 3 days with this due date, this date of maturity will be October 4th. So if you look into that illustration solution, the date of maturity they have written like October 4. So this is how we are getting that date of maturity. Okay, in your previous illustration also, I think we didn't write the final date in illustration 2. Illustration 2, the bill is drawn on 1st April. And there also the period of bill is 3 months. We will be getting the amount only after 3 months. So April 1st you have to count like this. April to May, that will be 1 month. So May 1st, June 1st, July 1st. The due date is July 1st, but the date of maturity will be adding 3 extra days. So that will become July 4th. So if you look into that illustration solution, you can see July 4th as the date of maturity. Okay, so this is how you are getting the date of maturity. Now we'll start writing journal entries. So now the case is dishonoring a bill discounting a bill, and at the time of discounting a bill, there is no change in the entries of drawee's books. We have changes only in drawer's books. We have one more additional entry in drawer's books. That's all. Okay. So no change in drawings books, it is the same. So we will write the journal. The name is Prakash. He is the drawer. Draw the format. So the bill date, the date on which the bill is drawn is July 1st, 2019. That's directly given in the question. Now, what we have learned as first journal entry in the books of drawer is, while you sell an item, the journal entry is like debtor's account, debtor to sales. That's the first entry we learned. Should we write that entry in this question? No, because read the first sentence. It's written like Prakash received from Mohan an acceptance for rupees 30,000. They're not talking about that credit sale that happened in the firm. So we can directly start with that bills receivable which we got from Mohan. Mohan accepted this, so that we are going to record in our books. So that is what you have to write as the first journal entry. We are getting the bill. So it is bills receivable account debtor to Mohan. You can write bill is drawn. Amount is 30,000. Okay. The next is, usually we will get the payment, isn't it? First we will write the credit sale entry, then the bills receivable entry, then when we get the amount, that is cash or bank account debtor to bills receivable. These are the three entries we learned. These are the basic three entries in the books of drawer. But now, are we getting the amount? No, because we have the drawer. What is he doing? The drawer is discounting the bill with the bank. Okay, and bank is giving us the amount. So we are not getting anything directly from the debtor. The debtor will make the payment on the date of maturity directly to the bank. Understood? That example we discussed in the previous video. So what we are getting is directly from the bank, and that time what we have to write is cash or bank account debtor. You can write the same date, cash or bank account debtor, discounting charges account debtor. It's an expense for us, so we are debiting it. To, we can cancel this bills receivable because that is given to bank, so that we are cancelling. Okay, we don't have that bill with us, it's given to the bank now, so you have to cancel it. You can just write discounted the bill or bill discounting. That's enough as narration. Now you can write the amounts. Bill receivable, you just look into the previous transaction, previous entry. Bill receivable, the amount is 30,000. Same thing you can write in the second entry also. So bills receivable will be now credited with 30,000. Then for that discounting charges, previous video we have discussed how to compute the discounting charges, and here the rate of interest is 12%. The calculation will be like this: 30,000 into 12% into 3 by 12. Why 3 by 12? Because that is the period of the bill. It is written there, a bill is drawn and which is due after 3 months. So that is the period of the bill. Okay, always you have to compute on the remaining period of the bill. Suppose you discounted with the bank only after 1 month. Then here your calculation will be like into 2 by 12. So this discounting charges must be computed only on remaining period of the bill. Understood? If you are discounting with the bank after 2 months, then your remaining period will be only 1 month, because altogether we have only a time period of 3 months. Okay, so always compute discounting charges on remaining period of the bill. Here we have discounted on 1st July itself, so we have entire 3 months. So this is how you have to do discounting charges calculation, and that is 900. Balance you can write for cash or bank, because we know that total of debit must be always equal to total of credit. So credit is 30, debit we have 900 already, the balance you can write for cash or bank. So this is your journal entry. The final entry, that is normal entry, is cash account debtor to bills receivable. Should we write in drawers books now? No need, because the amount is being received by the bank directly from the debtor. Understood? So only these two entries. This is the new entry actually we have for discounting. The other entry is same like your previous case. Clear? This is the entry for bill discounting. This is a new entry you have to study in this case. Then the next is journal we have to write in the books of drawee, that is Mohan, isn't it? Yes, Mohan. Okay, so for drawee, the first basic entry is purchases account debtor to creditors, which is not required in this question. So we'll leave that. The next is the drawee is going to give a bills payable to the creditor. So that time we can write the date also you have to write 2019 July 1st, and here creditor's name is Prakash. So we are giving to Prakash. So Prakash's account debtor to bills payable account. You can write as the narration gave acceptance. Then the amount is 30,000. Then the next entry, see, when there is bill discounting, we have a new entry only in the books of drawer. There is no change in drawee's books. So drawee's books, 3 entries we learned already, that is purchases to creditors, which we haven't written for this question. Then we gave them bills payable, so we wrote creditors debtor to bills payable. Finally, we have to make them payment. So that time what will be the entry? Bills payable will get cancelled. So that will be bills payable account debtor to cash or bank. But in this case, to whom we are making the payment? I mean, to whom Mohan is making the payment? It is directly given to the bank. But there is no change in the entry. Entry remains the same. It is bills payable account debtor to cash or bank. And the date also you have to write carefully. It is not July 1st. He will be making the payment on the date of maturity. That means you have to add 3 more extra days. We drew the bill on 1st July. So you have to count 3 months first. That is August 1st, September 1st, October 1st. With that you add 3 days. So the date of maturity will become October 4th. Okay. So when there is bill discounting, there is no change in drawee's book. We have an entry, an extra entry in drawer's book only. Okay. So with this, illustration 3 is over. Next heading you write, the next case, third case, when the bill is endorsed or negotiated in favor of a creditor. Give the heading when the bill is endorsed or negotiated in favor of a creditor. We will take the same example that we discussed. A Limited is selling some goods on credit. That's for rupees 20,000. It's being sold to Ram. So Ram is drawee and A Limited is drawer. Now A Limited has a liability towards another firm or another person called Rahul. So Rahul is the creditor of A Limited. Okay. A Limited should make the payment to Rahul because Rahul is the creditor of our firm. So this is drawee, this is drawer, and Rahul is an external party not having any connection with this transaction. He is an external party. He is related to our firm A Limited and he is the creditor of our firm. Okay. If this is the situation, a bill is drawn for rupees 20,000 since it is transaction is credit sale. This person Ram didn't make the payment, so we have drawn a bill upon Ram for rupees 20,000 and that bill is with the firm now, with A Limited. A Limited can transfer this bill in favor of his creditor. Why? Because we are supposed to make him payment. Since we don't have the amount with us, we can transfer this bill which we got from Ram to Rahul. So we can settle our creditor like this. Understood? And that transferring is known as endorsement. That's the topic we are discussing here. When you transfer, that means when A Limited transfers this bill of rupees 20,000 in favor of Rahul. Rahul is our creditor, a third party to whom we are transferring, and that transferring is known as endorsement, or we can call it as negotiation also. Endorsement or negotiation. That means we are transferring the bill in favor of a third party or a creditor. And on the date of maturity, Ram will directly make the payment to Rahul because now Rahul is the holder of the bill. So Ram will be making payment to Rahul on the date of maturity. So this is called endorsement. And in this process, the person who transfers the bill is called endorser, and the person to whom the bill is transferred is called endorsee. Understood? So endorser and endorsee, these are the two new terms in this portion, endorsement. So now we'll write the entries, the basic entries. Here in this section, the basic entries again are the same. That means when you sell goods, the drawer's book will be recording the same entry, that is debtors account debtor to sales. Then we will get the bills receivable, so it is bills receivable account debtor to debtor. So all these entries will be the same. Finally, when we get the payment, it is cash or bank debtor to bills receivable. Now with this we are going to add one entry, that is for endorsement. Okay, so you write in the books of drawer, no need to draw the format, just one specimen entry. When you endorse the bill in favor of creditor, Rahul is our creditor, so we'll write Rahul's account debtor in your problem. Creditor's account debtor, what we are giving them is this bill. So creditor's account debtor to bills receivable. So after giving the bill to creditor, in drawer's book, can we write the final entry cash or bank debtor to bills receivable? No, because we are not getting the amount. We are not going to get the amount from who was our debtor? Ram. We will not be getting the amount from Ram because this bill is being given to Rahul, and Rahul will get the payment directly from Ram. So in drawer's book, that final entry which is cash or bank debtor to that creditor's name, which is not needed, or we can't write that entry in drawer's book. Understood? Cash or bank debtor to not creditor's name, sorry, not creditor's name, cash or bank debtor to Ram, that you can't write, or cash or bank debtor to bills receivable, which we can't write in drawer's book because this bill is being given to or endorsed in favor of a creditor. So this is the entry which will be added in the books of drawer. There is no change in the books of drawee, so that you can just write like this: drawee or drawee's books. There is no change. Then here there is one more person, that is endorsee. We have endorser and endorsee. This is drawer at the same time. We can call him as endorser also. He is the person who is transferring the bill. So he is endorser and at the same time he is a drawer. And in endorsee's books, so you can write in the books of endorsee, give the heading and then you write bills receivable account debtor to endorser. Because endorsee is getting the bill, so bills receivable will be debited in his books and it is received from the endorser, so we have to credit him. Then finally he will be getting the amount, so that is cash or bank account debtor to, he can cancel this, bills receivable account. So it is finally cash or bank debtor to bills receivable when endorsee receives the payment. Drawer or A Limited can't record this entry because he will not be getting the payment. The firm will not be getting the payment because we have endorsed the bill in favor of a creditor. So this is the entry in books of endorsee. Endorsee is a new term for you that you have to learn. No change in drawee's books. Same like discounting case. Endorser, this is the new entry because we have given to creditor. So creditor to bills receivable. So learn these new entries. Don't get confused. In drawee's books actually we have no change. So you don't have to study anything new. Just note the changes in drawers, and an endorsee is a new term for you. These are new entries. Okay.